Welcome to the Capital News. I am your host, Alex Karitis. Today is February 26th, 2020. Thank you so much for joining me. Title of today's podcast is Crisis of Credibility. And no, this is not a question. I know I made a point yesterday on our title of Bubble Bursting that was a question because so many of our titles are in the form of a question. Again, to get our minds thinking, to get this audience engaged into what's taking place. But today it is not a question. There is no doubt about it that there is a crisis of credibility. Not just here in the United States, but around the world. This has been a common theme, a common thread that we have been discussing here at the Capital News for several months now. And unfortunately, it is not getting any better. In fact, with what we are witnessing with COVID-19, it's perhaps getting even worse. Because now this is just something that, again, is exacerbating the underlying fundamental deterioration of the global economy. Politicians don't want to take the blame. They don't want to be the ones holding the bag. They don't want to take any type of responsibility for this type of fundamental deterioration taking place on their watch. This can't happen under a conservative party. This can't happen under a liberal party. This can't happen with the Republicans in charge. There's no way. This can't happen with the Democrats in charge. It's just unfathomable. We can't have this. Can't happen. This can't happen under the Chinese Communist Party. These things are supposed to be impossible. No politician wants to stand up and be a leader and be a truth sayer. That's all we're asking for here is the truth. The truth and some common sense. Because if they have to hide behind lies and falsehoods and exaggerations and deceptions, how can people, especially in the Western world, especially in the United States of America, where we are a government of, by, and for the people, where we are supposed to be the government, where we are supposed to be making these crucial decisions through our representatives, well, how are we supposed to elect the best representatives in the House, in the Senate, in the White House, if we don't have the truth? If we're to be treated like idiots, if we're to be treated like a bunch of sheep that is just supposed to be, corralled in a certain area because that's where our quote-unquote dear leaders want us to be, well, that's ridiculous. That's preposterous. That's antithetical to the founding of this country. That's antithetical to the Constitution of the United States, along with our other founding documents and what this country stands for. So this is not a question. There is undoubtedly a crisis in credibility, and it is global. And this could be another thing that is a little bit, obviously, less tangible. In fact, we could call it an intangible because we can't see it, we can't really touch it, but we know it's there. We know the crisis of credibility exists. And this, too, in its own way, can be a pin that is pricking this bubble, or at least letting some of the air out. Again, there are so many unknowns that exist as to whether or not this is finally the top. Have we reached that all-time high in this current bull market cycle, in this current expansion phase, which is the longest in U.S. history? Is it finally bursted? It's not going to happen overnight. It's not going to take a week. Again, we talked about this here yesterday a little bit in more detail, that this is a process. It's not going to happen overnight, not a week, maybe a month, most likely several months, maybe even a couple of years. Remember, if you go back to the dot-com crisis, the dot-com bubble, especially in regards to the NASDAQ, which subsequently skyrocketed in a melt-up, which is what we're witnessing here today, and then collapsed over the course of 2 years. It lost nearly 80%. So again, I ask this audience, are you prepared for this? You want to feel like the smartest person in the world because you keep buying things and they keep going up because you have a massive melt-up, courtesy of stupidity and crackheads on Wall Street and the Federal Reserve, much akin to what we've just witnessed over the past several months here. Again, history does not repeat, but it often rhymes, as they say, right? So are you ready to say and pat yourself on the back for being a super genius because you bought things in the course of a melt-up? But are you ready to experience the 80% drop? Because I don't think 80% is a ridiculous number, personally speaking. I mean, I've been saying here consistently, my base case, once this thing finally goes, and whenever that's going to be, I don't know, I don't have a crystal ball, it's going to be a minimum of 40%. A minimum. But I do believe the higher that it goes, the further it will fall, because markets always overshoot to both sides. However, if history is a guide, negative shocks tend to outweigh positive shocks. So if and when we go down and we suffer some sort of major bust, especially in the global equities market, we are likely to overshoot by a larger degree to the downside than we have in the melt-up to the upside. And again, there's a lot of hype, there's a lot of hysteria now in the media because this has been a continuation of a downside in the stock market and global equities for the past several days. And these have been large swings. 1% down days, 2%, 3%, some even 4%. And this has been day after day after day. But when you take it in the larger context of a several-month melt-up, this pullback of 7-8% that we have just experienced over the past few days, it's your typical correction. In fact, by the technical definition, it's not even a correction until you hit 10%. So it's just a mini correction at this point. We go further, of course, it'll be a deeper correction if we hit that threshold of 20%. These are arbitrary numbers, ladies and gentlemen, for all intents and purposes, but it's what we do as human beings. We talk about these things, we put out these numbers, these levels. If we hit that 20% threshold, then it's going to be considered a bear market. And then the question becomes, well, what happens this time? Because when we got to that point in the fourth quarter of 2018, there was still some juice left in the container at the Federal Reserve. There was still some juice with fiscal stimulus, with the plunge protection team, with Donald Trump jawboning, with the Phase 1 trade deal, which at that time wasn't a Phase 1 trade deal. It was supposed to be the whole enchilada, the whole thing, not just a parcel of it, but a Phase 1 trade deal. Of course, so you had all those BS trade deal headlines back and forth, juicing the markets one way, typically to the upside, but also to the down, I believe. Market manipulation, as far as I could see, which again goes to the theme of a crisis of credibility, because this is not something that a president of the United States of America should be talking about. And we're going to talk about what the president said this evening in regards to the coronavirus, COVID-19, because he was asked questions about the stock market nonetheless, and he, of course, opined. So we'll get to that. But I'm asking the question here for those who have been, perhaps fortuitously riding this melt-up. Now, I'm in my early 30s. I have a long time horizon, so I still have equities. I'm still long. I have some short positions, but I'm also in cash. I also have precious metals. I speak my mind. I put my money where my mouth is. I tell this audience to stay diversified and vigilant. I do the same thing. Because I do think once this bust occurs, and it most inevitably will, it will be an opportunity of a lifetime, especially for somebody who is building cash and has a long-term horizon. Because we will get through this. We will get through COVID-19. We will get through the locust outbreak. We will get through this everything bubble. But it's not going to be easy. It's not going to be the flip of a switch. It's done. Everything's okay. It's going to be a very long process. But if you have a long time horizon, then you can be a beneficiary of this. Now, for those of you who are closer to retirement or in retirement, that's a completely different story. Completely different story, especially when it comes to that risk-reward profile. You have to understand your personal finances, your investment objectives, what you can live off of. Are you going to have to take a step down? Are you still investing? What's your portfolio allocation? What are you doing? How much money do you need to sustain yourself? Because net, and we've been witnessing this for some time, the baby boom generation who is hitting the retirement age of 65 at $10,000 per day. Now, that doesn't mean they're actually retiring or leaving the workforce, but they are at least hitting retirement age of 65 at $10,000 per day. They are going to be net sellers of stocks, of equities, because they have to. If they've had retirement accounts, that was part of the deal with the government. Yeah, you can put some money in there, it'll be tax deferred, yada, 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 whatever the case might be. But now you got to start taking it out. There are mandatory withdrawals, so that makes you a net seller. Now, the question is, of course, it's money. It's fungible. They can put it right back in the market if they want to. But when you understand the broader economy, when you understand the broader metrics, the surveys that we go through here on this network, on this channel, I should say, time and time again, point to people not being prepared for retirement, not having enough money. So I doubt that most people who are going to have to be mandatory net sellers of equities in retirement are going to jump right back in to the market, especially if this thing continues at all-time highs, the risk-reward profile, I mean, you're just setting yourself up for disaster. Now, that's me. Maybe you want to ride the wave, but don't come crying to me for tax bailouts or government bailouts or this, that, or the other. We have to be responsible for ourselves here. And again, that goes to the crisis of credibility and the president getting out there today, this evening, in regards to COVID, asking some questions, answering some questions in regards to the stock market, and saying, yeah, everything's going to be fine. We'll probably get, to 30,000 on the Dow. It's still, of course, yeah, it was a big hit, 2,000 points, whatever it was over the past couple of days. But in the context of when I came into office, when I was elected, we're up several thousand more. So net, we're still up, and we'll be fine. We'll get over this, and we're going to go and boom like we never have before. And, of course, he had to throw in another jab at the Federal Reserve, which, of course, I'm fine with if you want to critique the Federal Reserve. But call them out on the bubble that they are creating like you did when you were a candidate. Now you're calling them out because they're not doing enough of the problem. They're not cutting interest rates enough. He again is calling for negative interest rates. This audience who has been with me knows how detrimental negative interest rates are, can be, and will be to this country. He makes the argument that, other countries have negative interest rates. Why can't we have negative interest rates? You look at Germany, we're the biggest, strongest country ever. Of course we should have negative interest rates. Well, that's not just necessarily true. You know why? Because we're also the bigger debtor nation. The biggest debtor nation on the planet, okay? $24 trillion and counting, with trillion-dollar deficits as far as the eye can see. And this is not taking into consideration any type of recession, which of course will happen because recessions have not been outlawed. So they will happen, and it's not just going to be $1 trillion. It'll be $1.5 trillion. I wouldn't be surprised at the depths of this if it's maybe even over $2 trillion. So our national debt is going to grow exponentially, and that's not taking into consideration the unfunded liabilities, which, is amassed to over $100 trillion. So that's why the market is still demanding some sort of positive return, at least on a nominal basis, because we know here in the United States, on a real basis, nominal rates minus the inflation rate, it is a real negative interest rate. So again, it could be a matter of time before the Federal Reserve buckles and caves in to the whims and wishes of Donald Trump, and they say, okay, yeah, we're going to go to negative interest rates also. But it's already here in real terms. Are we going to get nominal terms like it is across the world? I mean, go ask Japan how they're doing. They're in recession. Their financial system is nothing to be envied. It's nothing to be mimicked. Go look at European banks and their financial sector. Go look at their largest economy in Germany. They're basically in recession. Their financial situation, their financial system, their banking sector is not to be mimicked or glorified. Their central bank policies are not to be commended and applauded. You want to critique the Federal Reserve? I'm all for it. This audience knows that I want the Federal Reserve abolished. I want the federal income tax abolished. But don't come out here and criticize the Federal Reserve and say, I want you to go deeper into negative territory or go into negative territory. Continue to print money. Continue to be involved in the overnight repo market, which I don't see that ending anytime soon, especially now, especially with COVID-19. This is going to be a convenient excuse for the Federal Reserve come next week, or about 2 weeks in middle of March, when they have their Federal Open Market Committee meeting, to use this as justification to say, well, there's a lot of uncertainty around there. There's undoubtedly supply shocks. In our mind, in our view, there's undoubtedly a demand shock with this as well. It's not just one-sided. It's a supply shock and a demand shock. And again, we talked about this yesterday as to whether or not this is going to be an inflationary event or a deflationary one. It could be both. It could be both. It depends on the product, the service, the items in which you are analyzing. It could be both. So that's what you have to ask yourself. What are you specifically talking about? And then conduct that analysis as to what's likely going to transpire. Something that's more with inflationary pressure, higher prices, or something that's more deflationary pressure on downward pressure on prices. In regards to the president's remarks this evening with respect to COVID-19, I think it was about time that the president came out and made some comments, answered some questions in front of the press corps. I don't want to be nitpicky here and say it was, too little, too late type deal. I don't want to go down that road. Some of it was, I thought, presidential. Some of it I thought was worthy of what he was saying. Some of it I thought was a little bit comical. Some of it was a little contradictory to what we have been hearing from the people that he surrounded himself with in the White House briefing room this evening. The president, we know, takes great pride and value in the stock market and its performance. He doesn't want to cause panic. That's a good thing. That's a good thing. Nobody should want to cause panic. But when you have your medical team there, and they're of the mind that it's virtually inevitable that there is going to be a further outbreak of COVID-19 here in the United States. It's not a question of if but when, like we discussed yesterday. And then the president comes out and says, I don't really agree with that. I don't believe that it's inevitable. I mean, could the president be right? Yeah, it's possible. It is possible. But when you're dealing with these types of situations, I think it's really incumbent upon our leaders in government to be as honest and forthright as possible. And yeah, there's always possibilities of XYZ. But in these types of events, I think we have to put possibilities aside and focus more on the probabilities so people can be properly prepared, properly equipped to deal with what may transpire. I hope it doesn't transpire. But you know what? I've been saying this for over a month because I've also been saying that I think this is the real deal. That I think that this coronavirus, COVID-19, is going to spread, that it is going to be a pandemic, a global pandemic, which it already is, by definition. It's in some 41 countries now, I do believe. And the numbers in those countries continue to grow. And this audience knows my feelings when it comes to the Chinese Communist Party. I don't believe those numbers for a second, because something was very interesting, because I believe it was a CNN correspondent who was also a doctor, I believe, who asked the president a question in regards to, well, how do you view the typical flu against COVID-19? Because you want to give people the correct information. Because when it comes to the mortality rate in regards to the typical influenza, it's about 0.1% or maybe 0.01%. But the numbers are large because so many people can contract the flu. And we talked, that was discussed this evening as well, about, it could be anywhere from 30 to about 70,000 people can die annually from the typical flu. But the correspondent was asking, when you're looking at the mortality rate here, in regards to COVID-19, we're already between 2 and 3%, not 0.2, not 0.3, but 2 or 3%. And this is based off of the numbers that are being reported out of China, which I don't believe. Not for a second. So can you imagine how much more severe the mortality rate could actually be? And remember, I've been stating from the onset of this thing that it's not just the mortality rate that we have to focus on, but maybe just as importantly, if not more so, is the number of severe cases. People that have to be hospitalized, people that have to end up in quarantine in a hospital, people that have to end up in the ICU, the intensive care units within hospitals. Are there enough ICU units around the world to handle this? Are there enough ICUs in the United States to handle what could transpire? The answer is no. The answer is no, there is not. That's why we see makeshift hospitals being erected in China. At first it was 2. Now there's some 19 being erected. And again, these are not hospitals by definition. They're buildings with hospital beds in them. Reminiscent of what you saw if you look at old photos from the 1918 Spanish flu, which decimated tens of millions of people globally. And that was before you really had global travel to the degree in which it takes place today. So there's a lot of unknowns, which in and of itself is cause for concern when it comes to market performance, because markets are about profits. Entrepreneurs and businesses, corporations are about making money. If they're going to invest, of course, it's going to be in the future. So they want a certain amount of certainty built into their assumptions, built into their models that they think are going to be as rock solid as possible. Now, nothing is perfect. Nothing is completely rock solid. But at least if they can get a handful of pillars that remain steadfast, then they can make a decision. You know what? My return on investment, my ROI is going to be 10%, 7%, whatever it's going to be. But that's enough because I can make money off of that. I can make good margin off of that. And it's going to give us a good leg up into the future to gain market share here, to gain market share there. But with so many uncertainties from so many corners of the world, CFOs, CEOs, members of the board are saying, nope, you know what, we're going to pull back. And this has been a common thread, not since COVID-19, but since before this. Before this, remember, this is not the underlying problem. COVID-19, the trade war, all these other supply chain disruptions, all these other demand shocks, these exacerbate the problem that has existed here in this country for years. It's been glossed over by massive tax cuts. It's been glossed over by massive deficit spending. It's been glossed over by regulatory cuts. It's been glossed over by central bank rate cuts, quantitative easing, although we're not supposed to call it quantitative easing. Some central banks going deeper into negative territory, etc., etc., etc. They are doing their best to kick the can as far down the road as possible. The problem with this, it causes a boom. And the bigger the boom, the bigger the bust. There's no leadership. There's no accountability. There's no credibility. That's why we have a crisis of credibility around the world. Okay? So this COVID-19, it's still going. Here's a headline for you. Asia Pacific stock markets mostly in the red on Friday amid fears that the virus outbreak could become a global pandemic as cases outside China grew further. Meanwhile, just hours after President Donald Trump said the risk of the virus to the Americans remains low, U.S. health authorities found what could be the first case in the country involving a patient who neither had relevant travel history nor was in contact with another patient with the virus. So this is not good news, ladies and gentlemen. This is something that we have been concerned about because this brings up a lot of questions. Well, who is this person? How could they have contracted it? They didn't travel anywhere, at least not that we know. They weren't in contact with another patient that we know of. So somebody else has it, and they don't know it yet because everybody's immune system is different. Some people can contract this virus and get it very quickly and suffer from it severely. Other people could have it for 14 days, maybe an entire month, and not even know it. But still, nonetheless, be contagious. That's what makes this thing so dangerous. It's basically a sleeper. So these are the unknown questions. This piles on with the uncertainty. Markets do not like uncertainty. But now you have a true supply and demand shock. Companies aren't going to make their expectations. They're not going to be able to make their numbers. And the market's in this melt-up. Some people like to say it was priced to perfection, so that means everything had to go right. All of those numbers, all of those projections had to be hit or exceeded to sustain those types of price levels, those types of valuations. Well, that ain't going to happen, Jack. It's not going to happen. We're not even going to come close to it. And I was glad to hear today, I think it was on Fox News, a former CEO of a large restaurant chain, I can't remember his name, but basically stating what I stated here to this audience yesterday, that we're not likely going to see a V-shaped recovery because if people are traveling, yeah, they might go and travel again, but they're not going to travel for longer. Yeah, somebody might go out to eat, or they're not going to go out to eat, but they're not going to go out to eat twice. They're not going to pay the bill twice. Okay? These things are lost. They're not going to be recouped. That's just not how it works. And the further this thing continues, and I do believe it's going to continue for quite a while because of the incubation period, because of the unknowns, because of the lack of test kits, because of the lack of testing that's taking place, because of the lack of global adequate healthcare systems that are in place to manage this thing appropriately. This is going to continue for some time. Will we get over it? Yeah, we will get over it. We will. We will continue. But how severe in the process is the question, and that is a huge unknown. And no amount of cheerleading from the President of the United States or the President of China or South Korea or anywhere for that matter is going to stop it. You have to allow the professionals to do what they do best and hope that they can get it under control. Because they're all going to admit to all of us, because this is the truth, that even if there is a vaccine that comes to the market, it's at least a year away. At least a year away. And this assumes that this virus doesn't mutate in the meantime. And I hope it doesn't mutate, and I hope everybody can contain this thing. I hope anybody who contracts it does not get sick or does not die or does not end up in the ICU, all that stuff. But we already, unfortunately, know that that's not the case. That is not the trend. And when you continue to look at those numbers coming out of China, we don't believe them. So I think this thing is going to get much worse before it gets better, unfortunately. Stocks, the Dow Jones Industrial Average was whipsawing back and forth today, mainly to the upside, but closed in the red, giving back another 124 points for the day, down about 0.5%. The S&P 500 giving back 12, down 0.4%. The NASDAQ 100 actually gained 39 points, up about 0.4% as well. At the time of this podcast, we have the Japanese markets trading. The Nikkei 225 is down an additional 521 points, a loss of 2.3%. Across the pond in Europe, UK markets were up 0.3%. The German markets, the French, Italian markets relatively flat, along with the Spanish markets gaining about 0.4%. The Australian markets gave back 51 points, a loss of about 0.8%. Now, I do want to take one sec. We're going to go back because I want to look at some other Asian markets that are open at the time of this podcast. But I want to continue onward with some of the commodity market space because we have crude oil WTI hitting, I believe, 11 or 13-month low on the backs of increased stock supply, which is no surprise to this audience because we've been talking about this here for months. And, of course, the demand shock. So it's both, okay? So we have WTI trading at $47.92 a barrel at the time of this podcast. We have Brent, the international metric, down as well, trading at $52.70 a barrel. Natural gas is hanging on, $1.90 per million British thermal units. Across the board, gasoline is also on a big downward trend at $1.41. Heating oil also on a big downward trend at $1.48. Gold and silver continue to be somewhat of a mixed bag. I mean, perfectly honest, I would have thought these things would have maybe not taken off, but would be a lot higher than where they stand today. But a little bit of a reprieve back up in the green at the time of this podcast. We have gold at $1,652 an ounce. Silver is trading at $18.08 per ounce. All right, so that's some of the commodity space that we like to focus on here. Again, being diversified, having some precious metals, as far as I'm concerned, is a good idea, but do your homework and do what's best for you. Bond market, U.S. 10-year Treasury, 1.3%. All right, let's look across the curve. Let's see what happened today in the bond market. Again, U.S. 10-year Treasury note yielding 1.3%. The 1 month is at 1.58. The 3 month at 1.52. So we remain inverted on the 3-month 10-year. On the 2-year, we're at 1.13. So not inverted there, but you never know what's going to happen. It could happen. The 3-month 10-year is a little bit more predictive, something that I look to with a little bit more weight. You want to understand why. There's podcasts. We discuss this. Check out our website, The Capital News, and check out our videos. We did a couple of capital economics presentations on the yield curve, what it means, why it's important. Check that out. It'll do you some good. On the long bond, the U.S. 30-year, we are now yielding 1.81%. So a little changed from yesterday, but still at record low territory. So who's leading who here? Is it the Federal Reserve leading interest rates lower? Is it the market just saying we're giving up here? Is this the equity market finally catching up with the bond market because we experienced massive divergence over the past several months of this fantastic melt-up in global equities, particularly here in the United States? Is this just reality sinking in? Is this the bubble bursting? Recent titles that we have had here on the Capital News podcast. And of course, today, title is Crisis of Credibility, so add that to the mix. And I just think it's just a nasty brew of a whole host of issues that are just coming home to roost. No surprise to me, and it should not be a surprise to this audience because we've been discussing these items for months. Now, let me take a look at some Asian markets that are open right now. Again, the Japanese market is down 2.3%. The Chinese market, Shanghai Composite, is up about 0.3%. The Indian markets are down 0.8%. The South Korean market continues its downward trajectory, losing 20 points, down 1% at the time of this podcast. The Hong Kong market giving back another 233 points, down 0.9%. So, again, folks, something to be mindful of is Hong Kong. They are at the crux of a lot of this, a lot of political strife. We've been talking about the Hong Kong protests here for months. They continue. Now you have COVID-19. You have a massive slowdown in global travel. You have borders that are being closed off and sealed off to contain and quarantine people from a COVID-19 outbreak. Global trade is slowing down. You have a massive amount of the world's population in Asia, in China, India, South Korea, Japan, all bunched together with a virus that is highly contagious. So there's no way that the world's second largest economy, China, of 1.3, 1.4 billion people, with the epicenter of this thing in Hubei province in Wuhan city of about 10 to 11 million people, and we're only talking, 70,000 people have been infected and a couple thousand have passed away because of this? I don't think so, Jack. I don't think it's even close to that, at least 5 times, and honestly, I think it's at least 10 times higher than that on both counts, on both fronts. And do not forget that the official count, the way in which somebody is going to be diagnosed, that terminology, that methodology rather, has changed. It has changed a couple of times. So they're making this stuff up as they go. You either have it or you don't. And you either have the resources available to properly test for it and determine if somebody has contracted this virus, or you don't. But the Chinese, we've done extensive analysis and discussion on this. The Chinese Communist Party is about self-preservation. It's about self-preservation. They got a lot of balls in the air that they're juggling, a lot of defaults on the horizon. These were going to take place without COVID-19. COVID-19 is fuel to the fire. It's gasoline on the fire. That's all it is. It's making it a lot worse. And of course, the human toll, which should not be, discounted or looked at in little light. It should be taken very seriously. It's more important than what your precious stock market does. But again, getting back to the president, finally, some discussion on what's taking place. Putting in charge Vice President Mike Pence. He is going to lead the team of scientists, of doctors, of researchers, of virus hunters to get this thing quarantined, hopefully globally, because the United States has to take a lead in this because we have some of the best scientists and doctors and researchers on the face of the planet. So this is a human event. Okay? This is a time for mankind to come together, if that's even possible. I still believe that it is, to come together and solve this, to do what is necessary, obviously within reason, to contain this and get it under control. Time will tell. The World Health Organization has told us repeatedly that the window is closing, it's narrowing to get this thing contained before it becomes a global pandemic. I mean, by definition, we're already there. We're already there. Okay? 40-some countries. There's about 200 countries on the planet, so that's a fifth. That's 20% of the country of the world. 20% of the countries have some form of COVID-19. What happens is anybody's guess, but the markets don't like it. We understand why. They were already grasping for air. They were already priced to perfection, if you will. It was just a little bit of a push they needed for this type of correction. So the question remains, is this going to be a standard correction of about 10%? And maybe we'll see that tomorrow. And then we could rebound from there. And remember, even in the midst of a bear market, some of the sharpest corrections. Because remember, a correction in a bear market is the opposite that in a bull market. So in a bear market, a correction is a spike to the upside. Some of the most severe spikes to the upside occur in bear markets. Now, we're not there yet. We're not in that 20% bear market phase, but we could get there quickly. This is recent memory. We witnessed this in the fourth quarter of 2018, so we know how quickly it can get there. But the entire bottoming out process, the entire going throughs of a recession or perhaps a depression is not going to be a V-shaped recovery like we witnessed in the stock market in the fourth quarter of 2018, first quarter of 2019. That's not going to happen this time. At least I don't think it will. Because I think everybody now is aware of the underlying issues that we have been discussing here for months. I think if you have the Federal Reserve come out and cut interest rates, it's not going to do anything. It's going to be pushing on a string because it's just not there. Yeah, you can print the money. Yeah, you can throw it out of helicopters. You can do whatever you want. But if there's nothing there to buy because of the supply chain shocks, and if people aren't allowed to go out and buy stuff, even sitting home in their pajamas and order online, if people can't be in trucks on the road delivering things, dropping off packages, well, then what good is it? Then what good is it? It's just sitting there in a pile. Get what I'm saying here, folks? The Federal Reserve is out of ammunition. They are trapped. I think they know it. I know it. This audience knows it. It's just a matter of time before the rest of the investing world wakes up to this reality. And when they do, look out below. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.